And joining me for a closer look at that market action is Katzenellenbogen from Sanlam Private Wealth. Thank you so much for your time, Greg. It's quite pleasing to see gains on the JSE yesterday after it failed to hold on yesterday. What are you making of just how the JSE is performing, and I guess even the Rand, considering the political developments that we are seeing today and what we are awaiting today as well?
Yes, hello. So I think that there's quite a feeling of optimism in the country at the moment. We'll soon know later today whether that's justified, but certainly in South Africa, people are optimistic that this government of national unity is going to be beneficial for the country, and the markets are reflecting that. So the JSE is up about 0.5%, and the Rand has been stronger this morning, and bonds are holding their own. But this feeling of optimism is best reflected in the shares of the banking stocks this morning. You've seen all of them: Nedbank, Absa, Standard Bank, First Rand, all up very strongly. I think Nedbank and Absa up around 5%. And then you've got retailers as well, Mr. Price, ShopRite, all up strongly on optimism that the government of national unity will be able to turn this economy around. So it's all, our market is driven this morning by South African events. Unfortunately, we must keep in mind that globally things are a little bit tougher. The outlook, the US with the Fed saying they'll only reduce rates once this year, that's put the markets a little on the back foot. And then, of course, we must be cognizant of the fact that a crisis is brewing in France, with the president calling a snap election. And if the polls are right and the right-wing parties come up, they have previously been talking about taking France out of the European Union. So we have to watch that. This would be a crisis much bigger than the one we had in 2012 with Greece. But for the time being, the South African markets are responding favorably to South African events.
It's quite interesting, Greg, because you also mentioned the retailers, and I mean, it was quite interesting to see even Mr. Price's reaction, because yesterday it was trading in the red after it released its results, but of course it has joined the party trading in the green today. And I know that some of our retailers have, you know, their own operational issues. Are investors at this point just shrugging those off and really just counting on the fact that if the operating environment is good, then the retailers will do well?
Well, don't forget, in the last financial years, the retailers had to provide enormous sums of money because of load shedding. Now we've been a few months without load shedding. If that continues to go forward, less or no load shedding, that will be very beneficial for retailers' bottom lines. But of course, Mr. Price as well, the dividend was much better than expected, so I think it's captured. But really, retailers today and banks really have just caught the positive move that seems to be sweeping the country.
Is that also what swept through MTN? Because yesterday that share was down about 4%, and Telkom actually was even leading those losses there in the telecoms, down 6%, even though it did have a good trading statement, or rather just a good bottom line improvement there. I think on Wednesday they released their trading statement. Is MTN also catching on to this? You know, obviously, I guess barring the volatility that the stock does experience, particularly when it comes to the Naira.
Yeah, well, I think that, you know, all telecom companies around the world have been struggling recently, and I don't think so. They're becoming more like utilities. They generate a lot of money, but I think they're all ex-growth, and that's why you're starting to see. And then, of course, MTN has those additional problems about the collapse in the Nigerian currency and when you convert it. So yeah, I understand, you know, the telecom results were good, but generally speaking, from a macro point of view, the outlook for telecom companies is that they're essentially ex-growth.
Yeah. And Greg, it's also been quite interesting because, I mean, we've had some good, encouraging inflation data coming out of the US, to the point where even when the JSE was under pressure, the US markets reached fresh record highs, particularly the S&P 500 and the NASDAQ. Is this still really just emphasizing the underlying difference and divergence between the JSE and those US markets and really just our economies as well?
Well, I think it's in terms of the economy. You know, the American economy has been extremely strong, although that is showing signs of slowing down. And you mentioned about inflation in America. Well, inflation looks like it's starting to come down, but one of the key components of that is what they call shelter inflation for rentals and that's still pretty sticky, and that's why you found the Federal Reserve unwilling to lower interest rates at the moment and are only looking at one cut this year. In South Africa, the Reserve Bank would like to see inflation in the midpoint of the 3 to 6 degree, 3 to 6%, and so that would be around 4.5%. But at the moment, it's around 5%. So they still want to see inflation come down. But I think that if the outlook for South Africa's growth is going to improve, then I think that there'll be room for them to cut at least once this year for our Reserve Bank to lower our interest rates. But there's been a big difference in the performance of the economies in the US and in South Africa. So hopefully, the US economy is slowing down. So hopefully South Africa will turn the corner, then we'll start to get some positive growth, because unless we do that, it's impossible to make a dent in our unemployment rate.
Yeah. Greg, what's also interesting is that I saw that Discovery also was flying high today as well, up about 6%. And I mean, that's a stock that's actually been under a lot of pressure, particularly with the bill, the NHI bill, being signed there into law right before the elections. Is this maybe the markets saying that because they had obviously been nervous about the impact of NHI on medical aids, is this maybe them saying, this government of national unity where you have some parties opposing the NHI the way it is now? Maybe the market's saying that, maybe there's still some hope and some upside and runway for these medical aid companies like Discovery.
Well, I think because the SA Inc. stocks, they're getting, caught up in this wave of optimism at the moment. But the National Health Bill has been signed into law, but it's a question of the implementation. So because you have a government of national unity, then the ANC might be willing to listen to the representations that people were making prior to being signed. So it's possible that there was, it was electioneering, signing the bill so quickly. But I think that but nobody really knows. We have to get the government in, see what we get, and over time. But I think that there is an expectation. I don't know how justified it is, but that it will still be a while for the implementation of the bill.
All right. Well, Greg, before we head to your stock pick, let's reflect on some of the counters that have found favor with some of your peers.
So this time I'm going to go for Insura. I'm going to go for Momentum. Got the new CEO who's been in for a while, Jeanette Marais, and they've got their Capital Markets Day coming up in July. So we're expecting them to put forward new targets. We think that there are opportunities to improve efficiency. We think there is still excess capital in the business, which can either be invested in further growth or can be returned to shareholders through share buybacks.
So I'm going for SPAR. So even though SPAR's done quite well over the last few days, I still think it's theoretically very undervalued. So I think some of the big tail risks that market were concerned about, big rights issues and so forth, that seems to be quite much lower probability at the moment. And they seem to be getting traction on some of the issues they are trying to deal with, for example, Poland.
So I'm going to go fairly boring on the banks and go for FirstRand. Again, last time I was on the show, it was Mr. Price, and I'm just really trying to pick some decent quality SA Inc. shares that should potentially do well if we get a half-decent government of national or coalition government. They're trading on a PE of 10 times, FirstRand dividend yield 6%. So a lot of bad news priced in, despite the fact that it's had a bit of a rally over the last 2 weeks.
Right. Thoughts on those counters, Greg? You did speak about the banks earlier on, of course, benefiting from the kind of risk on the sentiment that we are seeing today on optimism over the outcome of the government of National Unity. First Rand, you did mention, of course, I think ABSA was up about 6%. What about First Rand? Would you be going for First Rand at this point?
Yes, I think, look, First Rand is very well run bank, and in terms of brand recognition, it stands out as one of the top recognized South African brands in Africa. And so I think that, with banks, is very much dependent on the economy and what happens with the economy, and also because how the government is perceived in terms of the bonds that they issue. Banks are very big buyers of government bonds. So things are not looking, and bond yields start rising. It's not good for the banks in terms of unrealized losses. But if things turn around and you've started to see some positive signs in the bond market, that also certainly helps banks. But I think banks do well when the economy is doing well, and I think the optimistic mood for the economy going forward is what is driving these stocks today. And First Rand is a pretty good, one of the top banks in the country.
All right. What about SPAR? Because, of course, with the expectations for interest rate cuts, the expectations for this government of national unity to kind of turn the economy around, investors are going into SPAR. But, I mean, they have had their operational issues even in the results that they put out this week, also talking about still the headwinds that they are experiencing from the SAP implementation. But looking like they're trying to sort all of those out, including Poland. What do you make of SPAR at the moment?
No, well, I think it's been disappointing, and it's still 18 months later that their IT systems have not been, sorted out, the IT problems with the SAP, and that has had a negative influence for them. And then, of course, the business in Poland, which is up for sale. I think they do have a buyer, but the question is working out what the value of it, if it has any value, and so SPAR has been very disappointing. And in the retail space, unfortunately, ShopRite has eaten everyone's lunch.
All right. Well, let's take a look at your stock pick for today, Greg. What are you picking?
I'm picking BHP Billiton. I think with BHP withdrawing their offer for Anglo, and they have to wait another 6 months unless somebody comes with a counter offer. But I still think that is extremely well-run company, and the underlying the iron ore prices are starting to improve, and copper remains, although copper is back below $10,000 a ton. It's pretty close to that, and I think that the outlook for copper is still very strong. It looks like that they will find some common ground with the government on the claim in Brazil. And I'm not ruling out that BHP Billiton comes back for Anglo again in 6 months' time. But I think the underlying effect of the outlook for copper and iron ore, if the Chinese economy can start to show signs of, you're starting to see some very early signs of recovery in the Chinese economy. If that continues, this will be very bullish for BHP Billiton.
All right. Well, thank you so much for your time and giving us your analysis on what is currently moving investors' money. That was your midday market update with Sanlam's Greg Katzenellenbogen.